More bad news for the housing market. Mortgage rates jump back up again, 7.22%. That's where we are now. Housing guy Mitch Roschelle is with us. Can the housing market truly recover if mortgage rates stay above that level, 720?
Well, the problem, Stuart, is the definition of recovery, because I'm not completely convinced that the market is in trouble. If you're a realtor and there's less homes on the market and you're making less money because you're selling less homes, you're in trouble. If you're a home buyer, prices have steadily, creeped up. They're continuing to creep up. So I think it's hard for home buyers, but the market for people who actually own homes isn't that bad. There is a knock-on effect to the economy, though, because if people aren't buying homes, then people aren't buying furniture. They're not buying home improvement. Then there's certainly a trickle-down effect when the housing market slows. But values are still there.
But it's the politics of this, isn't it? I mean, first-time home buyers, young home buyers, they really are priced out of the market. I mean, it's very difficult for them to get in. The American dream, home ownership, that is fading for so many people. And there's a political point to be made there. That's Biden's constituency, and they're priced out of the market. It's a negative for Biden, isn't it?
Right. I completely agree with you. And you look at that younger cohort who are, starting to come into their own, maybe starting families, getting promotions in their jobs, doing sort of all the right things, and yet they can't buy a home. That's why there's this massive market out there for people who actually rent homes as opposed to apartments, because people want to feel, like they're in a home, have a backyard, have a barbecue grill, have a picket fence, have a car in a garage, but they can't afford to buy them because the prices are too high and mortgage rates are too high.
Quite a situation here. I want you to address this one too. A new study shows or finds that homes in South Florida are overvalued by 35%. Okay, I don't know what they base this study on, but that's what they're saying. South Florida, Naples, Miami, that kind of thing, overpriced 35%. Mitch, that sounds like a bubble to me. Is it a bubble?
No, it's not a bubble. Here's what's interesting about that study. What they did was they went back, and I like Florida Atlantic University. It's our local school down here. But the fact of the matter is they looked at historical trends, and relative to, longer term historical trends, prices are higher. However, the trend that they forgot to look at is the population trend. The population in Florida has been booming for the last 5 years. It accelerated greatly sort of through COVID, and it's continuing to accelerate. It's growing at a rate of 1.6% a year. So that's adding, considerable number of people, 300,000 plus people to the state of Florida. And as it relates to housing, we're only building about 110,000, 120,000 new homes a year in the state of Florida. So if there are more people moving here than we're building new homes, guess what? There's no bubble. Prices are going up because of supply and demand.
Okay, so prices are going to hold at current levels in South Florida and maybe go up some more. All good stuff. Mitch Roschelle, thank you very much indeed. See you again soon. Have a great weekend, Mitch.